Hey Chris, what's up?
What's happening, my friend?
Hey
All
guys,
good.
this is Hood Talk. I'm Brian Jones. I'm here with Chris Hood, a professional trader and the world's most interesting man who's also old school. Old
Very old
school
school.
is the best school, right?
Absolutely. I'm so old, the school was named after me.
That's awesome. You're
Man.
not that old. You don't look a day over 80.
Well, thanks, man. It's my 81st in a couple of weeks. No, this COVID lockdown just makes you feel so much older than you are because you're in this chair all the time and there's no reason to go outside. So I just feel immobile.
Yeah,
Looking forward to getting back one day.
I have a kettlebell and some things, and I can go over and work out with a few people at the gym, so it's not been as bad for
Well,
me.
you remember last week I was telling you about that bandy thing that I got where I was using the lady weights,
Yeah,
the big band. So it actually measures your force improvement over the period of a week. So in a week, I went up on my deadlift by 56%. So
nice.
I'm feeling a little bit more active. I've progressed from old lady weights to just young lady weights, and eventually I'm going to be on young man weights, and then
Yeah.
I'll move
Well,
up.
if you stop working out for a while, that's the only way to get back into it without hurting yourself.
Yeah.
And are
Man,
you putting all this? Are you tracking all this in your spreadsheets, Chris?
I've actually got it on an app on my phone.
Uh,
So the phone actually measures your. Let me see. I can pull it up and I'll show you. So the app itself has got little
huh,
tracking things, and then you
that's cool.
go review progress, and so overall I'm up 21%.
Congrats.
And
That's
if
work.
I look at my deadlift, so I can just scroll to deadlift, I'm up 56% on the deadlift. So
Deal.
I really enjoy this thing. It's the quietest exercise machine or exercise thing I've ever done, because usually it's this noise, when
Right.
you go rower and stuff.
You have to make
This
your
thing
own
is,
noise by screaming and yelling.
yeah, there's none of that, and it's just simple, easy. The science behind it's really interesting. I find the writing that this guy's done about the tests on variable resistance really interesting. So
Mhm.
we'll see if it translates into being a monster on the mat, or if it just gets me to the mat and then everything else is just a disaster. So
Well, you want to keep fit, so when you go back, you don't just
yeah.
break yourself the first day, because your mind will be running at your body's old pace, and then you'll go out there and I've had this happen a lot. You go out there, and then the first night you sprain a muscle, you twist your neck, everything, you come
Oh
home,
yeah.
you can't
I
move.
don't want that, man. It's almost like you've got to have a set of commandments to go and train. Thou shalt not.
Yeah,
Yeah, there you go.
exactly.
Yeah. It's
So
like rules for trading, man.
yeah, okay, yeah, you were talking about this. So you were putting get together some commandments of trading. So
Yeah,
you want to give us a little
yeah, I can give you
snip-
a snap of them. So, one of the things that I'm very particular about is, you've got to have a set of guidelines to guide your action. Just like, people have commandments to guide their behavior. Trading is a behavior. You need rules to isolate yourself, because consistently I see beginners make the same problem, where no matter what you say about the P&L will always be a factor in someone's decision making. Right? I've made 35%, let me clear now. And then 2 days later, they go back, they see the trade, they go, oh man, I should have done this, I should have waited, or I should have exited, or whatever. So what I thought of doing was, I've started to write down some of the principles that I run by, and and how we do it. So the first one that I have is, you never risk more than you're willing to lose. So the whole idea of trading is to win, but the second commandment is also never lose. Now we know that never losing is a silly proposition, because you're going to lose about 30 to 40% of the time. So when you lose, you don't want to be risking. Let's say if I said I was going to risk 1% every time, and every time I lost that full 1%. All right. I would never really blow out my account, because I would land up losing maybe 7 trades in a row. I've only lost 7%. That's manageable. What I mean when you say lose 1%, you should try and lose less than that. So if I'm risking 1% and I put my stops in and I calculate it the correct way, I don't want to be losing 1%. That's what I'm willing to lose if everything went to the complete shitter. All right. But I want to try and get out losing less. So never risk more than what you're willing to lose, but also within that loss thing, try to lose less than what you're willing to lose. That's rule number one. No, rule number two is choose your entry point carefully. Right? Don't just randomly buy stuff. You've got to know when things move in the right way. So picking the bottom of things and picking the top of things to get out, that's hard for anyone, professional or amateur. It's difficult to do it because you always run the risk of getting out and then going back and say, oh, I should have waited 3 days. The hindsight is a phenomenal analyst. So pick your entry points carefully. Don't just go in randomly. Know where you are going to get in. So one of the methods I like to use is if I'm doing a long transaction. So I'm going to be sitting in a transaction for a couple of weeks. I'm going to wait for, on the daily chart, for example, 2 closes above a specific entry point. And that could be it's crossed the 8-day EMA or the 8-day simple moving average. And I'm waiting for the second close above that. So if it's on a higher high, it's moving up, second close, okay, time to get in. I don't just get in because it's touched the line. What happens if it falls back? And
you need some confirmation that's actually going to.
You do need confirmation. So you've got to find what confirmations work consistently for you. So I find the double close tends to work really well. If you're purchasing a stock that's in a strong upward trajectory, don't buy your whole allocation straight up front, because most stocks, particularly ones that have overextended above the 8-day moving average, tend to fall back. People eventually will take profits and then it falls back, and you've over allocated at the top. Now you've got a problem because you can't allocate more into it to average down because you've already put too much in. So always be careful about that.
That makes such intuitive sense when you think about it. And then it's everybody, and I don't do this anymore. Like when I see everybody wants to jump in on the one that's climbing because they think it's going to climb forever. And they don't realize maybe it will climb for a lot longer than you think it will, but it's like everybody who's buying is also making money. At some point, somebody's going to start taking profits, and then when it starts to drop, everybody takes profits, and it just wouldn't.
There was one. The way to look at it is like this: when you trade, and you trade to an outcome, right? You want to have as much of an advantage as possible when you do that trade, right? And I can guarantee you, not one person in the retail space, no matter what chat group, whatever forums you're in or whatever, has an advantage, right? We don't. There's just the informational flow is geared against us. So as a retail trader, you've got to be even more acutely aware of the counter trade. Who is the guy on the other side? All right. Are you trading against the guy who's a novice? And if you are, you're probably going to win. Or are you trading against the guy who's running a $5 billion hedge fund for Goldman Sachs? And if you're a retail guy who's spending 5 minutes a day looking at his charts, and you happen to pick a trade where you wouldn't know, but the other guy is a professional trader, you're dead. You're dead, right? So all of the things have to stack up for you. You've got to have an advantage. You have to have either an advantage of the chart. The chart's got to be trending in the right direction. You've got to have high probabilities. You've got to get the right price. There's a lot of things that have to stack in your favor to mitigate the odds of you losing, because your counterpart on the other side of the trade is a far better professional than you are. When I see these adverts on Facebook or whatever, where guys are saying 10 minutes a day, you get a Bugatti, I can guarantee you it doesn't happen. And the problem that comes in is that most people are, convinced that informational flow and access to data this and algo that and trade pattern this or whatever gives them an edge. No, it doesn't. They are leading themselves into the slaughter. Like, honestly, I think that the professionals sit by and watch these Robin Hood traders and all of these guys sitting over there, and they are licking their chops going fresh meat. That's what they do, right? So if you don't have a set of rules that create an advantage, you're dead. And you know what? You might win for a couple of weeks. And then what happens is you start to confuse your luck with skill. And then inevitable, you blow your account up. Done. You'll be finished before you even start. So try and, set up using probabilities, using the charts. The charts can actually be simple. The more you do them, the easier they get to be read, right? So I don't believe that charts are foolproof. I don't, but they will work on a certain win rate, right? So when I know that when I do a trade and I've done the analysis, I've done the charting, I've done the indicators, I've done all of that, my probability of winning is far greater than if I didn't do that. So I'm going to keep doing it to increase my probability. I mean, you know this. I mean, I think over the last 100 days, we started a challenge about 19th of October. One of the challenges I had was, how do we make $100,000 in 100 days? That was a goal that I set for myself around 19th of October. We did it in 96 days. Out of those trades, we did about 500 trades, which, okay, by anyone's standard, that's a lot of trading. That's a lot. But I had to keep my risk in check. So we did a lot of trades. Out of those 100 trades, in the last 3 weeks, we've had 35 trades that were over 100% because of probabilities, because we set the trades up to work in our favor. And we're not just talking, those trades when they're bigger than 100% are not spread trades, put spreads. These are call spreads and long calls because the market is giving us those opportunities. So using those probabilities and using these setups is what sets you apart. It's going to give you an edge. Does it guarantee you 100%? No, my win rate was around 70%. But you've got to create that. So that's another rule that's important. Next one, don't take small profits. Like one of the things that retail guys get completely sucked into is they're risking dollars to make pennies. And, there's an expression, I can't remember where I heard it, but don't be a dick for a tick. Like, don't do that, right? If you're risking dollars, we make dollars, right? And ultimately, you want to risk pennies to make dollars, which is why we do butterfly trades, because we're risking small amounts to make big amounts. So don't take small profits. Don't limit yourself to fractions of what you're capable of. Third thing, don't get shaken out of trades. Yesterday's wash at about 10 o'clock in the morning, that sell-off that we saw when everyone said, oh, well, the $1.9 trillion is not coming as soon as we thought, Congress, blah, 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 whatever it is, the political shenanigans that continue to drive things. Look where we landed up at the end of the day, pretty much flat.
I find that kind of interesting. So about how people will apply a reason to the market drop aside from just a normal market drop. I mean, I mean, obviously there can be reasons, but
there are things that drive. But remember, the market is a leading indicator. It's not a lagging indicator. So it looks forward in time. So if they know that there's going to be a huge pool of liquidity coming, it pops prices up because people know that liquidity is going to come into the market. Where people sometimes go wrong, and this is something particularly for novice traders, they'll analyze a day chart. They'll make an entry on a day chart. They will initially write down on their trading plan, I'm going to hold this trade for 2 months. They've bought a 90-day delta at 80. They've done all of the things right. And the first mistake they do is they pull up the 5-minute chart. As soon as they go in, they watch the 5-minute chart. 5-minute chart, in, out, in, out, in, out, all these false signals all over the place. And the guy gets shaken out of his trade. Yesterday at 10 o'clock, I got 5 calls between 10 and 11.
I was actually going to ask you how many people were freaking out yesterday if you were at.
The thing that causes people to freak out, one, they have the wrong strategy on the wrong stock at the wrong time. 90% of the people who call me generally are people who sold puts last week for this week's expiry. That's it. And they did them at the money. So A, they didn't follow the rules of time. B, they didn't follow the rules of standard deviation. And C, they didn't look at deltas. So when you screw up that way, it's usually because they're chasing yield. So one of the things I don't teach is Look at the yield you're getting. Look at the yield you're getting. I think it's like the blind leading the blind. How many of these basic courses where they tell you to win a Bugatti, you're gonna win so much, you'll buy the Bugatti in 10 minutes. It's all yield-based trading. It's garbage. That stuff doesn't work. It's gonna work for maybe 2 or 3 weeks, and then you're gonna overload, blow out your account, and you're done. Your trading career is finished. So
you go for consistency and even
consistency and edge. Yeah, if you try and trade, like for me, naked puts are probably one of the worst strategies to sell to a beginner, because your risk theoretically is unlimited. Why would you teach someone with no experience a strategy that could potentially blow out their account, knowing that these people the people with less experience don't have the ability to look at profit and risk and tie them together?
It's like giving a little kid a fully auto AK-47 to learn to shoot with. It's
naked puts are the options market version of the opioid crisis. They're incredibly addictive because the returns are seductive. Because if you think about it, the sales pitch is simple. Oh, why don't you just buy this contract? You're buying stocks you want at a discount. Okay, stocks you want at a discount to me is a misnomer, because if the market drops like it did in March, you weren't just buying them at a discount. You were paying 60% more than what they were worth. You didn't get them at a discount. So that blew out a lot of people's accounts. That dropped from February to March. Your broker doesn't care that you've got a 90-day contract. They look at the liquidity of your account and they go, you need to put more money in because you can't support the assignment risk on those contracts. So this is where leverage will come back and bite. And that's why some of those guys that were doing naked puts right at the beginning of last year, A, they didn't select the right stocks. B, they didn't understand the market was going to fall. C, they chose the wrong strategy. D, they were looking only at yield. They got greedy. So when it happens, I look at it and go, well, it serves you right. You can't, if you're going to apply that strategy, be prepared for the consequence. So right. It's an important thing for beginners to recognize, is that naked puts by themselves are like crack. You will develop an addiction that's hard to kick. And that addiction can sometimes result in you losing your teeth. Oh no, that's heroin. I don't know. I can never do it. Meth or heroin is the one that makes
you. Meth is the one that eats your teeth away, I believe.
Yeah. So it's like meth. Yeah, you could still function, but you're not going to have any teeth. Great. That's the options. That's a beginner's option thing. So that's another one. Scale in and out of positions is another rule. Never ever allocate to the full amount. I'm always around 2/3 of what I can allocate, because I can take risk off the table and I can put risk back on the table and still be underneath my allocation. So that's a big thing for me, is making sure that allocation is never fully achieved. Hold on a second. I have a visitor. Come here. Come say hello to Brian.
Hi, Brian.
Hey, how are you?
Good, and you?
I'm good. I'm awake.
He's busy. We're trying to get him ready to do Tom's terrific trade.
Not happening.
You gonna win some money today?
Get some pancakes down.
Okay, thanks, bud. Chapin, this lockdown thing really affects these kids. They don't have anything to do. So scale in and out of positions. So never really hit your goal. I don't ever really hit my 1%, except if the spread is really expensive. I'll hit it. The other thing is, know who you are. You'll be amazed at how many people come into wanting to learn how to trade. And I go, okay, let's first work out what type of trader you are. And they go, what? And I go, yeah, we need to understand. I need to understand your mentality. If you're a positional trader, we're going to take longer term positions. We're not going to be looking at the 5-minute graphs. We're not going to be running around like squirrels or that dog in Up. You remember the one that? Yeah. You don't positional. Positional traders are not like that. Are you an intraday swing trader? Okay, well then we only use these strategies. Are you going to be a day trader per se, just complete? Yep. Okay, well you're going to do that. Are we going to be doing swing on a monthly basis? Are we going to be looking at weekly swing? You've really got to know who you are. And your character, your personality, your ability to absorb risk at certain time frames will dictate which methodology you're going to use. And if you're not, some guys will come in and they love the labels. People love the labels. I mean, when you meet people and they go, oh, I'm a trader. And then you're like, okay, cool. Okay, so you trade. What do you trade? Oh, I trade Bitcoin and I trade, wheat futures and I trade this currency and all of this stuff. And I go, so are you profitable? No, because, my losses I make on my crypto are offset by my gains I make in wheat. And look, focus. This is why I only trade US equity options, because it's something that I'm more comfortable with. Could I take my method and apply it to crypto? Probably, but I don't like the asset.
So are all of those different, I guess, markets, commodities, futures, they're all different enough that you think that you?
No, I think that, look, trading rules are trading rules. You can apply them to any asset, because what we do is we trade a chart. We don't necessarily care about the asset underneath. I think in equities, there's still an element of fundamental, valuation or fundamental analysis, right? So when I go do a trade on Microsoft, I'm pretty sure Microsoft's not going to zero. But I can't be certain that buying, natural gas futures, I can't predict the price of natural gas as much as I could probably predict the price of Microsoft stock. So I tend to try and trade in markets I can understand. So I'm a lot more comfortable with the equity side. I'm not good at commodities. I tried my luck off in Forex. I found the leverage it made my nose bleed every time I went into a trade. So I decided to give that a skip. I did trade precious metals for a long time, and I felt that was pretty good, because once you start understanding the dynamics of gold and silver, it's a lot easier to trade gold and silver than it is to trade currency. But that's just me. Some people find currency easier than stock, but you've got to know who you are. Don't spread yourself so thin that you're in all over the place. That's key. This is a massive one. No, understand the strategies that you're using and know when to use them. Just because you only know one trade, it doesn't mean the market condition is always going to be okay for that trade. So you have to have a toolkit that expands. Yeah. So, what we do, you've seen it, we teach the covered call, the long collar, the married put, we teach the bull put spread. We teach all of those basic ideas and concepts first. Build a toolkit that can work in maybe a bullish neutral market, because that's the natural bias of the market, is neutral to bullish. The negative bearish, a bearish downturn in the market doesn't last for long. The downturn last year was February till about April. At the bottom of April, May, it sort of turned around. So you've got to have a toolkit that works under all these conditions. And what most beginners do is they go off and learn one strategy, they apply it in one market condition, and then they're never aware of how the market changes. And then they've got square pegs and round holes and nothing fits. And then they take losses and they go, it must be this trade strategy as opposed to themselves and what they're looking at. So that's an important one.
I'm just have a question. Do you know any, I guess, just contrarian traders that did you just love to trade the bear side only?
Interesting that you pull this out, man. If you look at GME, the stock that flew up yesterday, and it's just a short squeeze that is happening. Hedge funds have lost billions. We're not talking small amounts here. I think it was $81 billion from being on the wrong side of the market so far this year for some of these hedge funds. All right, collectively. That's what I'm reading. That's what I was reading yesterday. There are some people who are contra. I think Jim Chanos is one of the most famous short sellers in the market. Now, the thing is, for me, do I want to have a natural bias that's bearish or bullish? The market is naturally rising. When you are bearish, you are going so against the natural order of things that sometimes the irrationality of price can be way out there, far longer than you can be liquid in your position. Take Bill Ackman. A couple of years ago, he and Carl Icahn had this huge feud about Herbalife. And Bill Ackman landed up losing over $1 billion because he thought Herbalife was a scam. So you have an opinion and you went short, you lost $1 billion. $1 billion, that's more money than I think I could ever probably accumulate. But he lost it on an opinion. So I do think that short sellers are seriously smart, because they make money far quicker in down markets than anyone else. But I think you've got to be neutral. I'm not bullish or bearish. I just trade a chart. If the chart is to the downside, I trade it to the downside. I do believe, though, that the market is fundamentally geared to rise over time.
Yeah, if you step back and you look at the graph, of the market, it's going.
Sometimes you've got to become very controlled about how you let your opinion influence your trading, because you trade your beliefs. We don't trade. If you're naturally bearish, you're going to look at every chart with a bearish slant. Can I short this? Can I short this? Can I short it? If you're naturally bullish, you're going to look at a trade and you're going to go, well, I want to go long. I want to go long. I want to go long. And that bias can sometimes become a problem. It can become a crutch, because if the market is tending down and you're naturally bullish and you're looking only for bullish setups while the market is dropping, you're going to lose, because the market will bring everything down. Doesn't matter what everything else is.
So
that's why whenever we look at
that, how do you get through that as a trader? How do you get through that as a trader?
Self-discipline. It's hard. You've just got to be aware of it, because if you're not aware of it and it comes into your action, you could land up being, overexposed to the one direction of the market, and then the market kicks you in the nuts and then you lose. Right? So that's why what I try and do with guys is don't trade directionally on one side of the market. You should have some neutral trades, some bullish trades, some bearish trades. You should have a mix across the board, depending on what the markets are doing. So if the overall market is trading above its EMAs, why would I go short? It's hard for me to go short. It's a losing trade, because the trend is your friend, right? I never fight the weekly chart. The weekly chart tells me everything. So if the weekly chart for a stock is bullish, I don't take a bearish position. If the weekly chart for the market is bullish, it's gonna, it takes a lot for that chart to change direction. And you've also got to realize some of the big liquidity pools, the big funds in the market, use the weekly charts to determine direction. So you stick with what you know, what you can see, right? Do I think Tesla's overvalued? Of course I do. I think it's garbage. I can't trade like that. But I'm not going to take an opinion on it saying it's short. I'm going to short it now. I'm going to wait for it to be below those moving averages, because I know everyone else, the institutional guys, are waiting for it to do that. And then you take a position. So it's confirming your buy, confirming the trade. Look for the signals to confirm before you do anything. Just don't let your opinion. None of us are smart. I'll tell you now, none of us are smart. We feed ourselves bullshit all the time. We tell ourselves how clever we are. You've got to realize that you're not smart. You're at a disadvantage in this game. So if you're not trading, if you think that you should short Tesla at $800 or $900 or whatever it is, I can tell you that every Mickey Mouse trader out there is having the same idea. The professionals aren't shorting it, so why are you? And it's the same thing I have with these chat groups. It's not one pro trader that I know spends any amount of time on a trade in a chat room discussing trades. They don't do that. They're
doing their homework.
Yeah, they trade their plan.
Yeah.
If I want to talk to people about trades, I do it after the hours. I don't talk to people during the day. I try not to, except my clients. Anyway, let's move on to the next one here, which I had was you have to write your plan and track your compliance to the plan. Most traders reward themselves if they make money. The good traders reward themselves when they comply with their rules. The money's irrelevant. I don't care if I make money. I don't. At the end of the day, the money will take care of itself. What I do is, if I have a compliance factor of 90% for the week, so if 90% of my trades followed my plan exactly to the letter, I reward myself. If I go in, and I've got to be honest, if I go in and I haven't followed my plan, and I can see that my win rate's a little lower, my profit ratios are a little lower, I haven't followed my plan. Why should I reward myself even if I made money? I was lucky.
So you got to focus on the process. Like, did you kind of like
the process? Yes, the
like
process
the
is
training
what
in jiu-jitsu, you reward yourself for going to class and all that. It's not necessarily whether you beat this guy in the sparring match that day.
Who cares if you beat the white belt?
Right.
No, I don't care. What I look at is, how did I beat the guy? Did I start from a position of weakness and win? All of those things. And if those are my rules for sparring, I should also have rules for trading, and I should reward myself for being compliant with them. That's another one. You've got to know your performance in real time. The amount of people that I coach don't know their profit ratios, don't know their win rates, don't know their success factors on any of the trade strategies that they're using. They're just random. Those are the guys that are inconsistent. They land up having good weeks, and then another good week, and then 2 bad weeks in a row, and then they start doubting their plan, and then they ditch the plan and they lose. You've got it in real time. So every Friday, I upload my data into a really cool thing called Trader Sync, which looks at all my trades, and I can go on the weekend. I take my notes from my journal, I put it in, and I can see every single setup that I had. This system pulls data, and it draws a graph, and it tells me this is when I got in, this is when I got out. I can see it in a picture, and I can write there, oh, okay, I know what I did wrong here, blah, 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 bang, there's my thing. And then it actually looks at my portfolio, and it says, if you had followed your rules, this is what you could have done. Oh, okay.
That's pretty cool.
So I know that at the end of each week.
What's that program? What's the software?
It's called Trader Sync, TraderSync. I think it's fantastic. It's a great tool. So shout out to them. I don't get anything for you guys doing it. So, go in and have a look. There's others available as well. There's one called TraderVue, TraderVue.com. All of them have got something to add. I use both, but I think that you've got to know your performance. You've got to know what you're doing in real time.
I mean, that makes sense. Like, the only way you can get better at anything is to assess what you're doing. See if you're doing what you're supposed to, and then
absolutely. The other couple things are more like just comments, right? The one thing is, stocks and the markets spend 90% of their time range bound. So 90% of the time, stocks trade between a low and a high. That's what they do. Not all stocks spend time doing these breakouts. Use indicators to identify opportunities for potential breakouts, which is why we use the squeeze factor. So when we see the squeeze building, and we can see that the squeeze is going to be firing to the long side because we can build it up from 5 minutes, 15, 30, 1 hour, blah, blah, blah. You've got to build those positions and give those positions time to develop so that you can capitalize. I mean, Apple is a great thing. We started building a position in Apple about a month ago, and we got the pop yesterday. Pre-earnings, earnings is today or tomorrow, I think. We're going to get out of that position with a 12, 13% return. Very, very easy one to do, in the earnings cycle. So you've got to always look at, understanding that range. So know what the range is and look for opportunities for breakouts from that range. The thing with positional and swing trading, the biggest secret to it is being in the position. So I always trade to be 1 day early, then 2 days late. So I will look for opportunities. I will think, okay, this is probably going to be an opportunity over the next 3 months. Take a starting position now, and that will be my first position will be for 3 months. And if we see that signals are starting to improve in the very short term, the week, the 2 week time frame, I can add another position for the 2 weeks and the 3 weeks while my longer dated one continues to work. So I can still have 5 to 6 positions on a specific stock based on different time frames, based on different signals. And I think that's a key thing for positional trading, is that it's not just about one position. I could have a position in, let's say, the communications index over the next 4 months. It just had a breakout over the last couple of days with Netflix moving up at Facebook and all of that. So you take a long-term position, a sort of, when I say long-term, 6 months max. take a 6-month position on the XLC index on a bull call spread. All right. And then I could look at some of the components within that index and do shorter duration trades based on their TTM squeeze readings. But it's all within one sector that's now moving up. So I've got the index pushing it up. I've got the stock moving it up. That's the way to play positions. Don't just, screen for stock, pick a random thing and then move out. That stuff is very amateur and it's going to get you into trouble at some point. So being in the position early is important. Building your position as it starts working for you as well. And this is actually an interesting perspective on profitability. Your worst month that you have over the preceding 12, your worst month should not be worse than your third best month. Our job as traders is to be profitable over a long period of time, right? We are not going to be profitable every month. I think over the last year, I haven't made money in 4 weeks. So 4 individual weeks, I had less than 0. So I lost money in 4 weeks. So out of 52 weeks, I had 48 weeks consistently profitable. Well, not consistently. There were those scattered.
That's a good consistency. That's a good record of consistency there.
Yeah, but the thing is, I trade to a rule, right? My rule is to generate 2% a week, because if I can do 2% a week, regardless of the market, I will double my money every year. Now, that can be done by any trader with a plan, with the right strategies, with the right stocks. So it's not just for me. This is not unique to me. This is what I teach. So most of my guys are making between 2 and 4% a week, and they do it consistently regardless of the market. All right. You have to always say regardless of the market. So we trade up, we trade down, we trade neutral, all of that. But when you start breaking it down, you go month by month. My worst performing month cannot be worse than my third best month. So from a profit perspective, otherwise I'm never going to be profitable. If I keep having losses that are equal to my big months and I keep losing that money, how are you going to make money at the end of the year? So you've got to make sure that you have certain metrics that you measure, certain activities that you do repeatedly in terms of your portfolio. Otherwise, you're never going to be successful. It's going to be these random profit bursts interspersed with these losses that keep taking you back down to 0, right? And that's the thing we want to avoid. Retail traders are most vulnerable to it, where they'll have a good month. They make 10, 20 grand. Then the next month, they lose 15. Okay, they justify it. They go, oh, I'm up 5, so I'm still ahead. The next month they make 3, so they're up at 8. The next month they lose 10. Now they're down to -2, but they've gone 4 months into the year. They're not going to hit their goal. How are they going to double their account if you've lost 4 months of time and you're now below 0? It's never going to happen.
Yeah,
you have to now aim for 5% a week. You're going to land up oversizing. It starts pressuring you, right?
So when you get desperate, that's when you lose the most. We were talking about this the other day. When you put that money, when you start trading towards a goal that isn't just your rules, that's some monetary goal that you want to buy this house, and it's like, I was reading something about that. The old saying that scared money doesn't win.
It's psychological. This is 90% mental. This whole game is 90% mental. Too many retail guys put 90% of their effort into the stock pick. They put more emphasis on the trade as opposed to themselves. So, what I've noticed is the guys that tend to know themselves, the guys that tend to trade what they're good at. So not just saying, oh, well, I only know one strategy, so I'm good at that, so I'm only going to do that. They've got 20 that they can do. They have a bias and a preference to these, and they understand the market conditions. The trade is irrelevant. The trade will find themselves and the trade will manage itself. So those are pretty much my 16, 17 commandments of, if you want to be consistently good, this is what you need to try and put around. The final point is your account will respect the work you do. So if you're going to do 10 minutes a day, expect 10 minutes a day reward. All these ads on Facebook and what have you, of all these guys renting Bugattis, pretending it's theirs. And, I love it when I see these guys doing shots of their office, and they've got these screens and there's just graphs, and it's like, all of this stuff. I mean, if you saw my room, and it looks horrible. I'd much rather have my money sitting in my account working for me than buying these flashy offices and stuff. Those guys never talk about a process. They never talk about something that would be independent of them. This is the thing. Your methodology must be independent of someone else. It cannot be reliant on someone to give you something. If otherwise, you haven't created anything sustainable. What if that guy says, okay, I'm done. I'm never going to give you a trade again. Well, what are you going to do? You haven't got anything of substance. Then that's how I work with my guys, is I teach them a process and a methodology that can work for them with or without my trades. They don't need my trades. They can do it on their own. But the methodology works regardless of the trade. You can find your own at some point.
It's like anything else. It's like when I started doing this, I really wanted a coach. It's like anything. If you need someone to coach you, you can't just. It's like trying to learn the martial arts out of a book, or you just can't do it. It's impossible.
You can't learn to swim on dry land, man.
Yeah, exactly.
Yeah, it's a very interesting psychology for people. Most beginners will approach this wanting the 5-minute solution, and they want 100. They want a 10-hour result from a 5-minute input, and it doesn't work like that. There's a reality that comes when you do this for as long as I have, which is the more work I put into it, the better my results. So if you want to put 5 minutes a day into it, expect a 5-minute a day result.
The harder you work, the luckier you get, huh?
Gary Player, man. Yeah, the best South African golfer. But there's so much truth to it. You want to get good at Fibonacci, do more Fibonacci. If you want to get good at doing bull put spreads, do more bull put spreads.
It's insane that people believe that they can do that they can actually get good at something without practicing it, without putting any effort in it. People want the magic pill, and
it's particularly in this. But a lot of guys, when I get new clients and people call me up and I go, look, I want you not to trade, but for 30 days, I want you just to do paper trading. Guys with lots of money. And they're like, no, I've been trading. I go, no, you have to do paper trading first for 30 days. And they go, why not? And I said, because I need you to unlearn all the bad habits that you're bringing with you. Sorry, things have just buzzed. But the thing is, you've got to get rid of all the bad habits. So how do you get rid of the bad habits? Is you've got to first know what they are. And 90% of retail people who've tried to learn, trading from a book, for example, and I was one of these guys many years ago, don't know their bad habits until someone calls them out. And that's the big problem, is most people don't have anyone standing next to them going, you know what, you really suck at that. And you're being a bit of a dick. Don't do this, don't do this, don't do this. They don't know any better. And so when someone comes to me and they go, you know what, I blew out my account, I've lost $400,000 and I want to make it back, I often ask them, I say, show me your trade journal. Oh, I don't have one. Okay, tell me how you selected the stocks. Oh, my buddy in a chat group told me to do it. Okay, so I don't want you to go on any more chat groups, and I don't want you to be doing any trades that you don't understand, because that's what caused you to lose. And the amount of resistance that I get, like, no, I know what I'm doing. Well, clearly you don't. Otherwise, you would have lost 400,000.
Right.
So often with this, it's like learning to ride a bike. You've got to start with the training wheels. The training wheels, if you keep falling off a 2-wheeler, go back to a 3-wheeler. Then you get better, and then you start again. So I think that's the big thing for most traders, is just start small, but start confident. How do I build? You've got to build your confidence, right? If you take a white belt and you say to him, right, you're going to spar now. Here's some black belts on the side. Good luck. And you've got to win 3 times at least. It's not going to happen, right? Yeah. But if you take someone, you teach them how to shrimp, you teach them the basics, how to get out of mount, how to pass a guard, how to do all of that stuff. And then you say, go against your peer group. His confidence starts to build. It's the same thing in options trading. I want my guys to get 30 days of paper victories, so that they can see that when they have to apply their plan, they've got the confidence to be able to go, okay, I know I can do this. So let's go off and do it, rather than let's take 100 grand, throw it in the market, lose 40, and then we go, oh, the crap doesn't work.
Yeah, that's no way to learn that. Well,
I don't want people to lose ever. Like, for me, losing is a result. It's a consequence of something. And if you don't know what that something is, the ignorant answer is the market went against me. Okay, well, did the market give you any signals before it went against you to get out? Because the market doesn't sneak up at you like in a dark alley with a knife.
It's a conspiracy, Chris.
The market is not conspiring to make you bankrupt. It usually gives you signals. And if you don't even know that there are signals there, well, then you deserve to lose. Then this is the thing. If you haven't asked the questions, and you're just going to trade off a 5-minute read of a summary book on Facebook or whatever, then you know what the results you get, you're going to have.
You'll be glad to take those people's money.
You know what?
I mean, like in the sense of the trade. I'm not talking.
Oh yeah, look,
like
the market needs easy meat.
Yeah.
And by all means, I hope that I'm against you on the other side of the trade. That's the way I see it. But look, let me be clear. There are days where I get taken to the cleaners. There are days where someone else eats my lunch. I don't claim to know it all, and I certainly wouldn't want people to think I do. But I've been there at the bottom where I've lost. And I've worked out why I lost. And I look at it and I go, well, if I lost doing this, then there's a high probability that someone who doesn't have someone sitting next to them telling them what they're doing wrong is going to land up doing the same mistakes that I made. And that's what I try and get my clients to learn, is just don't go down the same learning path as me. If you go through my learning path, it's going to be problematic, because I was unprofitable for a long time because I was doing mistakes. I kept making the same mistakes. I didn't have anyone telling me. Now that I don't do that, I'm a lot more profitable. So would you rather not learn the right way to do things, or would you rather go down that path and make the same mistakes that other people have made?
Well, it's a good thing that you bumbled around and did all the mistakes, because it's like you can answer all these questions because you've been there. That's one of those things that I think makes a good coach, is that they can relate to people who are having those feelings and messing up and all that stuff.
No, I can tell you how to lose at the World Masters. I can tell you how to lose in jiu-jitsu tournaments. I'm very good at that. In fact, I think I'm one of the best at. I have a whole cupboard full of second place medals. And then awesome. The other thing, thanks, buddy. The other thing is I'm very, very good at being the only guy that goes into a 2-man division, a 1-man division and come second. So,
that is talent right there. That's,
man, gifted. That's what I say. Gifted.
We'll call you special.
There we go. I always like labels. So, so that's where we are, man. So the market's just started. Hopefully everyone out there is enjoying this. If there's, subscribe, like, write comments, send me questions, whatever you want me to address, and I will do it. And if there's anything that you need, mate, you know where I am. Just send me off an email.
Sounds good. Later on, Chris. I'll talk to you
later, buddy. Take it easy, man.
All right. Take care.
See you. Ciao.